reposition multifamily properties. When Seth and I started this company, you always want to stay on track with your model. Now, listen, economies change. You want to be able to pivot a little bit from time to time, but stay the course. Stay with your plan and execute it well. Be the best at doing it, and don't go off and start doing something else just when the going gets tough.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman. Today we are joined with Aaron. He's a co-founder of People's Capital Group. Is a leading New Jersey real estate investor, helping accredited investors and family offices build and preserve wealth. Aaron, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Hey, Josh, absolutely. Thanks for having me. Sure. My business partner, Seth Martinez, and I started People's Capital Group back in 2013. Realized there's a lot of opportunity here in New Jersey. So we help people build and preserve their wealth. A lot of family offices, accredited investors here strictly through New Jersey multifamily properties. We have an in-house property management company, vertically integrated. We completed almost 300 transactions together, Seth and I. So doing this a long time and trying to make our investors a lot of money and just always perfecting our craft, day by day.
Very cool. Let's go all the way back to the beginning, like we usually do. What got you into real estate? What was a pivoting moment? And then, what did you do before you got into real estate?
Sure. So I read a book called Rich Dad, Poor Dad, like a lot of people in this business, and sparked my interest in owning large-scale real estate and figuring out how to crack that code. I really wanted to create financial freedom for myself, my family, help other people along the way, and didn't know how to do it. I was a broke college kid, so I made a list. I said at the top of the list, my goal was to have a net worth of $1 million over 10 years and a passive income of $100,000. And I kind of worked my way down. I realized, learn the industry, make connections, save money. And I said, okay, I'll get started as a realtor. So I got my real estate license in 2010. Dismal market. I learned short sales and RIAs and bank-owned properties, and that was really the only types of deals out there at the time. And but I learned how to work on distressed deals, and I met investors that way. And over time, convinced some of those investors to invest with me in opportunities, and just kind of built my network out from there. I started a group called New Jersey Real Estate Network with about 5,000 members in it today. Did a lot of public speaking at different RIAs, and met my business partner out at different real estate networking events. His strengths complement my weaknesses. He had sold a medical billing company. He had some capital. He also had operational experience with property management and so on, and managing a business. I was good at finding deals, sourcing opportunities, public speaking, marketing, and branding. So we teamed up on that front, developed our management company in 2015. Now we have about 115 investors, and we try to buy 1 to 2 buildings a year. And we also do fix and flips still. We got a lot of wholesale. We buy small multis as well.
Got it. Tell us about your first deal, how that went, how it got financed, what you did to it, what the business plan was, so on and so forth.
You want my first fix and flip deal or my first multifamily deal?
Let's do the first of real estate and just the first deal.
Okay. All right. Let's see. So this is before I met Seth. And I teamed up with a guy who was 65 years old and just filed for bankruptcy. And he had a company that would consult other owners how to run their business. And he filed bankruptcy, which I found kind of ironic. And this is the guy I decided to go into business with. So anyway, we bought a single family home not too far from here in New Jersey. A smaller, probably 1,800 square feet or something. Needed a little work, did everything wrong. We didn't even test the septic before we bought it. I raised the money initially from my father. Friends and family is a lot of times how you raise that initial dollar. And looking back, it was good, but it was also bad because it didn't allow us to check enough boxes. If I'd worked with a hard money lender, they would have required a certain amount of due diligence and so on. And no one knew how to flip houses here. So anyway, my father had given us the majority of the money for the deal. I remember my business partner got the wrong insurance for the property. He got personal home insurance for the property to save some money. And he ended up having a bank account, which I was so naive, I didn't even ask for access to the bank account. Here I am bringing in all the money for the deal from my father. with this old bankrupt, pretty much scam artist guy. And he didn't include me in the bank account. He didn't even put my name on it. I didn't even know enough to ask, and
What was his role supposed to be?
he was supposed to manage the contractors. So I sourced the deal and raise the capital. He was supposed to manage the project overall, make sure we get the right insurance, hire the right contractors. And he hired a contractor that was just as shady as he was. We ended up paying this contractor for his poor quality work, and then he never paid his subcontractors. So his subcontractors came back into the house. They broke back in one night and stole out all the piping and all the fixtures they had secured to the house. They stole them back and left the house a complete disaster. Then when I approached my partner about this, he said, well, I don't know what to do. I hired him. This is the risk. I guess we owe your dad $250,000 and that's it. And I was like, no, that's not an option, man. And then it all kind of unraveled from there. Well, I realized he was stealing money from the bank account. He wouldn't give me access to it. And I ended up having to quit claim him off the deed. All right. And then went about trying to solve the issue myself. And hired another contractor. He did okay. He wasn't a thief. He was just not a great contractor, but he did all right. But then we had to get all different load calculations because we were putting in all new heating and cooling in the building. It took forever. It probably took 2.5 years to flip this property. When we went to sell it, the buyer did a septic inspection. I didn't even realize you had to do a septic inspection before buying a property. I mean, probably by then I did, but yeah, and it was just by the grace of God, the septic passed. But it just, whatever could go wrong did go wrong. And I only lost $7,000 on the deal because the market went up a lot the time I owned the property. We did a lot of work to it. My dad did have to step in and kind of help me, solve the problems and figure out the solutions to them. And he didn't know how to flip houses either. We were kind of learning as we went along. So it was a challenging experience. I was a young man, fresh out of college, and hired a really terrible business partner who ended up stealing money from me. And completely.
Did you recover any cash? Did he just keep the bank account and all the cash you put into it?
He eventually, when I figured out what he was doing, he stopped. I don't know how much money he really got away with, but I did eventually. He did get access to the bank account. Yeah. And kind of just get him out of there. Once I kind of caught him, he kind of stopped and realized, he didn't want to get sued. He wanted to deal with all that again. He was losing his house to foreclosure. So you don't want to get into business with people that are already losers. You want to get into business with people that are winners. My business partner, Seth Martinez, had exited a medical billing company. He was doing quite well. He had bought 3 or 4 properties, was managing them, was trying to build a decent real estate portfolio. And that was a good partner for me to take on. And I learned that from my first partner. And if I hadn't hired this idiot, and gotten taken by him, then I wouldn't have learned that lesson. Now I probably could have read a book. That would have cost me a little less, but I wouldn't have learned that way. I learned by experience and by miserable failure.
The true grit, the trailblazing.
Yes, absolutely.
Well, there's and that's the way to learn. Get in there and do it. And unfortunately, there's some bad actors out there, and they walk in many shapes and forms, and you just don't know what you don't know.
Yeah. But chances are, if the guy just filed bankruptcy and isn't trustworthy, isn't these days too, I would see through that. My sixth sense would be okay. And you got to look at people's actions. Where are they? Where have they been? What are they doing?
Yeah. Yep. Nope. That's fact. And then your intuition usually never fails. So,
right.
And that's where wisdom comes through experience. So that's our first flip. What gets you to multifamily? What was the time between your flipping your single family houses and then you decided you wanted to go with economies of scale?
So, that experience was tough. Flipping, that house is wow, that's a lot of work, to lose $7,000. Even if it all went according to plan, I would have made 50 or something. It's it's a lot of risks, a lot of work. But I kept flipping houses. Seth and I, we flipped a lot of houses in our day, probably 60 of them or so, and a lot of them done quite well. But I had additional experiences with Seth on deals that we were really good at flipping low to middle level homes, and we were doing quite well on those. And then we were like, oh, we're so good at flipping houses. Why don't we flip high-end homes, $1 million homes? We'll make $1 million profits. So we went into that. We hired the same contractors to renovate those homes as we were these $1 million homes, and they did a terrible job. So we just ran into a lot of challenges with that and took some big losses on these high-end $1 million flips. And through that, we realized, these are really challenging. At the same time, we were flipping a 25-unit property. And we made a lot of mistakes on that too. We hired the wrong management companies. We fired two. We ended up developing our own management company, like almost through necessity. And we realized, flipping a 25 unit is a lot more forgiving than flipping a single family home. You have, even if you have 5 tenants that are moved out, you still have 20 tenants paying you rent. Where on a single family home, if you have no one paying you rent, right? And no income coming in, you're paying these hard money loans. So we made a lot of mistakes in our 25 unit. We still did well. We still hit our mark to investors, our target returns. So we realized, hey, you know what? Multifamily properties are more forgiving. At the same time, we were building up a nice little portfolio of them, starting to get a little cash flow coming in. We would buy, renovate, lease up, refinance our money back. We're like, hey, you know what? Let's just really multiply this strategy and really achieve the rich dad, poor dad teachings, which is buying apartment buildings, repositioning them, improving the assets, creating more value in them, and then harvesting that equity growth through refinance and paying you yourself with borrowed money with the bank that your tenants are going to pay down for years to come. And that money you pay yourself is tax deferred money. And that cash flow is really, tax free cash flow because you're writing it off with your tax depreciation. And that's the right way to build wealth. That's how the wealthier get wealthy. You can create businesses like flipping houses. You can make money flipping houses, but that's a highly taxed form of income. And quite frankly, it's hard to grow and scale a house flipping business because every flip is different. You might use the same finishings and the same contractors, but every house, no matter what, has its own little challenges, its own things behind the wall, different, the years it was built, different municipal requirements, permits, whatever it is. And it's so challenging to replicate and scale a house flipping business, where buying 100 unit and renovating the units, that's scalable. So we found apartment buildings to be more scalable, more manageable, and more lucrative than flipping houses.
Yeah, it goes back to basis too. It's finding the property that you can buy at the right basis in order to invest the right amount of capital in each unit, to then have enough delta between purchase price, value added, value created, and then refinance or sale. There was a period of time that properties were selling on pro forma versus cap rate or versus what before renovation cost. So, and there's still a lot of those out there. So it's tough to find the right deals, but you just got to keep digging.
Yep.
And then you were forced to create your own management company. It's a blessing and a curse. I totally get it. But at the same time, you're in total control of the entire process through tenant evictions, notice to vacate, renovations, lease up, so on and so forth. At what point did you all figure out that you needed to be in control of the management? What happened there?
Well, we hired our first management company, which was like a nationwide brand. They promised the world, and then the building was just like held at like 75% occupancy. We're like, what are you doing? You promised so much in our meeting, when you begged for our business, and now you're not even performing even close to what we talked about. And they're like, well, it's South Jersey. What do you expect? So we fired them, and then we hired a small mom and pop company. We figured, we would go the opposite end of the spectrum and get better results. And this guy was interesting. He was like really insistent on having the security deposits. He's like, I really need to hold the security deposits. I can't do my job without them. I was like, no, you can. We can just release them as tenants need them, as you need them for tenants that move out or whatnot. And we'll hold on to the security deposits and we'll release them as they're needed to. He's like, no, I need to hold on to them. I was like, no, you're not going to. Just got a bad feeling about it. A few months go by, and he's not doing a great job. He's not doing as terrible as the other guys. We realize there's starting to be like holes in the account, and So what he's doing is he's meeting tenants at the property, collects the first month's rent and security deposit, and then meets another group of tenants for the same unit, leases it out to that same tenant. He was leasing out units to multiple tenants, collecting all the money, and then running off with the money. Thank God we didn't give him the security deposits. He would have stolen those. We had to take him to small claims court, won like $8,000, and just a big headache. So we realized then we're like, all right, we're going to work with other people's money, because at that point now we've gone out and raised money from a number of investors, and we're buying larger scale properties. We're going to work with other people's money. We need to have really good control of these assets. And to do that, we need to have our own staff, our own management company in place. And we started working at that. We created PCG Property Management in 2015. And that's been a very tough business to grow out. Property management is a very thin margin to business, meaning there's not a lot of profit. You need to have a lot of units to make any type of money with it. We don't make any profit on our management company. It allows us to have good control over our assets and to just manage our projects more efficiently, keep them on budget and on target with our schedule. So that's what we do with our management company now.
You make those the no profit up through improved NOI.
Yeah.
Your properties perform so much better, and then you can take them back to the bank and get your yield there, and which is even better.
That's right. Investors like it too. It helps you raise capital. People like a vertically integrated business. And we make our money through our ownership in the assets. And when you do a project on time and on budget, and you exit the building according to plan, then that's where you make your profit.
Yep, totally agree. And you all do all the renovations in-house? Well, probably contractors, but you control the materials and labor procurement?
No, we used to have contractors on payroll, and everything cost more and took longer. And then we said, you know what? It's actually better to work with independent contractors who we keep very busy. And these guys really don't have to go out and find business elsewhere. We keep giving them enough business so they can just stick with us. And we have about 20 different independent contractors, electricians and plumbers and GCs and so on, and carpenters. And we have about 6 main guys we use to renovate units, and we keep them very busy. We'll generally have anywhere from 8 to 12 crews going at any time. But we do have, independent contractors managing those crews. They buy the materials and everything from A to Z. It keeps our costs down. And if they don't do well, we can fire them easily. We do project performance pay. So if they don't accomplish a portion of the project, they don't get paid. But generally these guys, we're giving them so much business, they're giving us a very good price. And we still get, projects done for a very good number.
How are you controlling what materials that they're using? Is it certain SKUs at Depot or Lowe's?
Yeah, normally we are going Home Depot. We have a certain countertop guy we like. We have a cabinet guy we like. But, we do a lot of Home Depot stuff. We're generally taking Class C properties and repositioning them to Class B. So we don't have to go crazy on the finishings there. But, from time to time, we'll bump it up to a little bit nicer finishing of a product. But you don't want to over-finish your asset either.
Yeah. Well, we found, even just procuring the same bathroom towel bar from Home Depot, you can get on Amazon for a fraction of the cost, and it's nicer. The finish, just those little ways of procuring materials, it can feel better, look better without spending more, just because it looks better and feels better. So it's just being savvy with your procurement. But again, that goes into controlling the process. It goes into the whole thing.
Yeah.
So beyond these learning lessons, what are some things that you wished you knew now, or you wish you knew then what you know now?
So, I would say stay the course. Don't get distracted too many from, shiny object syndrome, right? This and that. A lot of entrepreneurs make that mistake. And I'm guilty of that myself, right? You see something else, the route you want to go down, short-term rentals. Now I'm doing this, high-end fix and flips. Now we're doing that, so you got to be careful getting pulled off course. The goal was to buy and reposition multifamily properties. When Seth and I started this company, you always want to stay on track with your model. Now, listen, economies change. You want to be able to pivot a little bit from time to time, but stay the course. Stay with your plan and execute it well. Be the best at doing it, and don't go off and start doing something else just when the going gets tough.
Yeah, yep, totally agree. Just stay focused. What do you think the impacts of AI is going to have on multifamily?
pretty significant, I'd say, but it's hard to say too. I think it's going to make things like project management maybe a little easier, or low quality sourcing materials, things like that. General management as well. I think due diligence. Um, it's hard to say right now. I mean, there's a lot of schools of thought. I mean, sometimes with AI, like you'll use AI. Like I used AI for my social media for a while, and I mean, all these clips and posts them everywhere, and like my numbers went down significantly, at least on LinkedIn and Facebook, because like it was just like kind of this like generic, consistent. It was like too much content, but none of it was really quality, and it didn't have my own voice to it, and so there's a balance to it. I've looked into those like AI answering services and stuff, but I don't know. You got to be careful with a lot of that, because also when it comes to raising capital, if you think someone wants to talk to a robot about what they're going to do with their hard-earned money, you're crazy. I don't think I'm going to replace my client relations manager with a robot anytime soon. But we already use AI as we do with certain softwares and services there. But it's hard to say. I think it remains to be seen. I don't think it's going to happen as fast as we all think. I think the technology it grows very quickly, but I don't know we're going to implement it as quickly as a lot of tech guys think, because it's not what we all want. No one wants to talk to a robot. I hate it when you call in, you can't get someone on the phone. Everyone hates that. That's not how you want to run your business.
Got it. I'm with you. I think it's definitely come a long way since 2023, and it's got a long ways to go. Because I mean, really, right now, today is the worst AI is ever going to be. What that means is that it's just
Yeah.
forward progress, day over day, minute by minute. But
Right.
do you all use what system you all use for management? Appfolio, Buildium?
We use Appfolio
Okay.
for our property management. Yeah. Mm-hmm.
Yeah, I think that there's some really cool workflows that it helps
Right.
build out. That way you can have more of a rapid response. People get information sooner. Lease up, and general leasing can be done more efficiently. Just filling in all the white space and help fill the gaps, become more efficient, so you can ingest more properties and not have to throw 1,000 people at it to make things happen. So
Right.
there's definitely benefits to be had. What that looks like on the tenant end in the long run, I don't know. I know that there's probably going to be more vouchers.
Mm-hmm.
It's just you have to see how things build out,
Yeah.
um,
Mm-hmm.
but also adapt and be kind of aware of what could be around the corner too.
Sure. Sure.
So,
Absolutely. Yeah.
what recommendations would you give somebody that's looking to get into real estate, wants to crack the doors of real estate, but doesn't know how?
I think it depends on what you do. I get this question a lot, and it depends on like what's on your schedule. Like if you have 3 kids and a wife, and you're like a doctor who works like 65 hours a week, like don't try to be like a GP or a property owner and go around and start buying like duplexes. Like you'll just be pulling your hair out. It's too much work. It's a management intensive asset. Invest passively, learn from a good operator who's going to give you monthly updates and quarterly distributions and do everything for you, and build your wealth in real estate passively. I have a lot of investors that are super busy, and they've done very well investing with us passively. Now, if you're like just fresh out of college or something or whatever, you're single, you're 24, you got a little time, like you could stay up late and wake up early. All right, like maybe you could, staple some signs to telephone poles and get out of there and do what I did. I would definitely start with all the free content, the YouTube, the books. Don't, spend $25,000 on some guru course. I know people that have done that and haven't even done a deal, and it's just because the gurus are going to get you. That's how they always do. Their job is to sell you overpriced education programs, and our job is to buy it, so it's you want to go out there and you want to take in as much content as you can for free. Learn from that, team up with someone that's their weaknesses complement your strengths and vice versa. It's going to take a lot longer and cost a lot more than you think to actually start a real estate investment firm, but it is possible. But make sure you have the time and the energy to go and do that, and the stomach for risk. It took me years to even make money doing this.
Yeah, yep. It's definitely a slow game for sure.
Yeah.
Very cool. Aaron, we definitely appreciate your time today. If somebody wants to reach out to you, learn more about yourself, a little more about People's Capital Group, how can they get a hold of you?
Sure. So my website is peoplescapitalgroup.com. We have ebooks there. We have podcasts. We have tons of incredible, even a return calculator, things like that. We have webinars and master classes we do almost every single month. We're buying a new property right now, a Class A building, a 63 unit that we're buying for $4 million below replacement cost.
Wow.
You can join our investor wait list there. You can get in touch with a member of our client relations team if you're an accredited investor. And just learn more about what we have going on there. You can learn about real estate investing and how to get started investing in real estate, actively or passively. So that's all at peoplescapitalgroup.com. And I also have a podcast called the Passive Cash Flow Podcast. We have almost about 200 episodes there, so you can check that out on all the major podcast platforms. On YouTube as well, People's Capital Group, just punch that in. You'll find us on YouTube. We have a ton of content. Also, our podcast, the Passive Cash Flow Podcast, is there. And just check out our content. It's all free. We don't sell education. We just help people build and preserve their wealth in New Jersey apartment buildings. Been doing this about 13 years.
Awesome. Aaron, definitely appreciate it. Appreciate your time today. I look forward to following you. Thank you.
Thanks, Josh. Appreciate it.
Bye.